Escalating geopolitical tensions have increased risks to Asia's economy, but the International Monetary Fund sees resilience in the Asia-Pacific, bumping up growth predictions marginally for this year and next year. Still, its new report warns of headwinds and uncertainties. For more on these and how they will impact Singapore and the region, we are joined by Thomas Helbling, Deputy Director of the Asia-Pacific Department at the International Monetary Fund. Welcome to the show. Now, you said there that Asia's economy is forecast to grow 4.6% in 2024 and 4.4% in 2025. But your report did also caution about headwinds for the region. What are the key obstacles for Asia?
So at the moment, if you look at our forecast, you just cited them, there's a very small headwind from 4.6 to 4.4, no big. And then if you look across Asia, there are slightly divergent trends. The slight reduction in the forecast is really due to China and India. If you look at India, it remains the strongest growing major emerging market economy. And the slowdown is just an economy going back to potential next year. In China, it's slower trend growth. In the rest of Asia, we see, for the ASEAN emerging market in particular, we see strength, roughly unchanged growth, and we see growth in the advanced Asian economies, Japan and Korea, picking up. You are right, though, we have warned of headwinds. We have even upgraded downside risks. The major downside risk in this forecast round is really increase in geoeconomic fragmentation and more trade restrictions. They have, again, we follow trade restrictions, we document them in our regional economic outlook, and they have even increased further. So trade restrictions have ratcheted up consecutively every year. They're higher, and it remains a big concern.
So geopolitical trade restrictions, as you mentioned, number one. But you did also mention China and the ongoing fallout there from the property market sector. Are we expecting to see any spillover effects into Singapore, or do you think that's already largely contained in China?
So there are spillovers from slowing growth. The real estate correction has been a drag on the Chinese economy. There have been spillovers. You cannot observe them directly as there are other factors, but there's surely having been spillovers. Our estimates are that the 1 percentage point reduction in China's growth have spillover of about 0.3% for the rest of the world. Countries that are more closely linked to China have larger spillovers. Others with less linkages, smaller ones. Now, if you look at the real estate correction, if you look at real investment, it has been large. Investment has contracted now for 3 years in a row. The drag has been partly offset by increased public investment, but domestic demand overall is weak in China, and that is an issue.
Okay, I have to also ask you about the event that's 3 days away. We all know the American elections are coming up. Ask your economic scenarios when it comes to whether it's a Trump victory compared to whether it's a Harris victory.
Look, we don't comment on elections. We, of course, look at scenarios. The major concern at the moment are increasing fragmentation, and that's what countries should prepare for. And what we emphasize in the report, that countries should try to restore an open global trading system, strengthen, reinforce multilateralism. I think that is the call of the day. And we call on countries trying to resolve the underlying issues behind trade tensions. For example, by having a work program on how to define and measure subsidies and establishing rule for agriculture. That would be a renewal or renewed efforts. And newly, I think, more efforts on dealing with industrial subsidies and industrial policies, the trade-related aspects.
All right. I will not push further on that. But I do have a final question for you. In terms of Singapore, how do you see Singapore needing to continue to transform its economy to meet all the challenges ahead?
So for Singapore, if you just look at the economic outlook, we see a pickup in growth this year, mainly driven by export. Tech export, electronics export have increased throughout the region, have been more of a driver of growth this year. And second, tourism. In terms of preparation, what we mention is On structural side, reskilling, the labor force preparing for the new challenges, artificial intelligence, digitalization, which could potentially risk employment. And the other is continue with prudent macroeconomic policies. In general, and that is not just for Singapore, we have highlighted a pivot to fiscal policy, trying reduce deficits where relevant and creating fiscal buffers.
Always good to hear from you, sir. Thank you so much for coming into our studio today. I've been speaking with Thomas Helbling, Deputy Director of the Asia Pacific Department at the IMF. Thank you.